welcome to Chapter 5, AIF Structuring. In this chapter, we will explore how alternative investment funds are structured from both a legal and operational perspective. An AIF is not just a pool of capital. It is a structured investment vehicle that defines how investors contribute capital, how that capital is managed, and how returns are distributed. Understanding fund structuring is important because it determines the relationships between investors, fund managers, and other participants and ensures that the fund operates efficiently and in compliance with regulations. One of the key characteristics of alternative investment funds is the pooling of capital. Multiple investors contribute funds into a single investment vehicle, allowing the fund to invest in opportunities that may require significant capital. The pooled capital is managed by the investment manager according to a predefined investment strategy, and any profits generated by the investments are distributed among investors based on their participation in the fund. Alternative investment funds in India can be structured in different legal forms, such as trusts, limited liability partnerships, or companies. Among these, the trust structure is the most commonly used, primarily because it offers flexibility in managing investor funds and distributing returns. The choice of legal structure has important implications. It affects how the fund is governed, how decisions are made, how investors are protected, and how taxation is applied. For instance, the trust structure allows separation between ownership and management, which helps in maintaining transparency and accountability. A typical AIF structure involves multiple interconnected entities. Investors provide capital to the fund, which acts as the central investment vehicle. The investment manager is responsible for deploying this capital into portfolio companies based on the fund's strategy. For example, a private equity fund may invest in growing businesses, while a venture capital fund may invest in startups. Supporting entities such as trustees and custodians ensure that the fund operates in compliance with regulations and that assets are properly safeguarded. This structure creates a clear framework for managing investments and protecting investor interests. Fund structuring plays a critical role in the overall functioning of alternative investment funds. A well-designed structure ensures that roles and responsibilities are clearly defined, which helps avoid conflicts and improves governance. It also ensures compliance with regulatory requirements and provides transparency in how the fund operates. Most importantly, it defines how returns are distributed to investors and how risks are managed. In the next chapter, we will explore the fee structure of alternative investment funds and understand how fund managers are compensated for managing these investments.